Is it recording? All right, so I'm going to carry on with my introduction. Again, as I mentioned, this is Joan Yuncala-Brown with the City of Palm Bay. We are hosting this Export 101 Session 2 International Methods of Payment and Financing Resources in partnership with the Greater Palm Bay Chamber of Commerce and the U.S. Small Business Administration. We have a series of fantastic presenters today to discuss financing options for your export expansion. Those presenters include Sandra Murtas from the U.S. Small Business Administration, Chris Clark from TD Bank, Patrick Ellis, Chuck Youngerman, and then we will do a question and answer at the end of the session. The question and answer, all questions should be held to the end. If you have a question, please put your question into the chat function. We will read them off at the very end and ask our presenters to stick around and answer those questions. Without further ado, we'll kick it off with our first presenter, Sandra Murtas with U.S. Small Business Administration.
Thank you, Joanne, and good morning, everybody.
One moment. Wrong one. Apologies. All right, can you all see my slide, Sandra?
Yes, I can see it now. Mm-hmm.
All right.
Okay, so good morning, everyone. As I mentioned, I'm getting some feedback. It might be from you, Joanne. Okay, perfect. So my name is Sandra Murtas. I work with the Office of International Trade at the Small Business Administration. Next one, please. So SBA is a federal government agency that was created in 1953 to help create and grow and expand internationally the small business companies in the U.S. And since the 1980s, the SBA has been involved in providing financing for small business exporters. Next one, please. Okay, so we want to start first by defining a small business. Basically, there is the North America Industrial Codes, where you can see all the industries and you can see how companies are defined as small businesses if they meet either the number of employees, or the other parameter is the annual sales. So in general, manufacturers that have 500 employees or less are small businesses. Of course, within those industries, for example, if they're very high labor intensive, then that number can go up to 1,500. That depends again on the industry. Distributors or wholesalers that have 100 employees or less are also defined as small businesses. Then we get into the service companies, which are defined by their annual sales, depending on the industry again and the type of service they provide. It can go up to 35.5 million as to define them as small business. Of course, there are situations, especially for federal contracting, where we use the alternative size standard, looking at some financial parameters for companies that might be borderline. They're not small business, but they're not a large company either. So we can use those parameters to see if they meet them and define them as or categorize them as small businesses. Next one, please. So SBA has three export financing programs that are used to help small businesses and the lenders to finance those the growth into international markets. So Why does SBA get involved into export financing? Next one, please. Because 2/3 of the world purchasing power and the majority of the population in the world lives outside the US. Sometimes we don't pay attention to that because, of course, our market is a very large market. If we think about the US government is the largest buyer in the world, so we tend to overlook the opportunities that are available in international markets. But that's it becomes a mistake many times, especially when situations like the one we're living today. And if you go to the next slide, in which we have a situation and difficulties that are associated with the pandemic. We see that if our economy gets into a downturn, we need to have strategies to mitigate the impact of that. So especially lenders nowadays, they want to, when a company is applying for a loan, they want to see a contingency plan which shows that the small business, and even if it's not a small business, the company is able to diversify its customer base. Basically, we don't want to have all the eggs in one basket. And if we reference to the 10 years ago, if you can go to the next one, please. We saw that the companies that were able to survive the Great Recessions were the companies that had a diversified customer base. Basically, they didn't, again, have all the eggs in one basket. And how did they diversify? Well, they had different markets that they were serving, the domestic and the international one. And as they were able to weather out the impact, thanks to the different markets they were serving, they were able to survive and thrive when the economy picked up again. And when we talk about exporting, it can be frightening for some companies, especially small businesses, which they see themselves as or lacking resources to enter international markets. But nowadays, e-commerce is a great tool. It's a very effective tool and a very efficient tool. I mean, a company, even a small business, can reach out to customers around the world thanks to e-commerce and the internet. So it's very important that we all take advantage of this tool to reach out to those customers in foreign markets. And that should be part of your business plan and your future growth plans to help you, yes, survive difficult times, but also thrive when we go back to normal times and the economy keeps growing. Next one, please. So another concept that we always like to remind small businesses and the lenders that provide export financing is that the existence of the indirect exporters, especially if we look at, for example, the South Florida market. We know that there are a lot of companies that are exporting, but many times those companies are not the manufacturer. They're just a distributor or a consolidator. And that means that the companies that are selling to them, even though they're not exporting directly, if their buyer is re-exporting the products and services they buy from them, that defines them as indirect exporters, which means that when they go and apply for a loan, they qualify for our export programs and also the Export-Import Bank programs. Export-Import Bank is a sister agency that provides insurance for foreign account receivables to mitigate commercial and political risk, but also they provide larger lines of credit to finance export sales by U.S. companies. Next one, please. So SBA has basically 3 programs that are available to lenders to get guarantees when they make a a loan to a small business exporter. We have the international trade loan, which is the basically the entry program many times, especially to finance long-term needs. We have the Export Express, which is a great tool for companies that are starting to move the first steps into international markets. And then as they grow their export sales, we also have the Export Working Capital Program, which is a dedicated program to finance export sales. Next one, please. So here you can see the average size of the loan. Like the Export Working Capital Program is around $2 million, the average size of loan, a loan that is made. You have the Export Express, which is around $220,000, and the international trade loan, which is about $1.75 million on average in terms of the size of the loan. So let's look into in detail to these programs. Next one, please. So many people are familiar with the 7A loan from SBA. It goes up to $5 million, and the guarantee is 75%. If the company is exporting, getting ready to export, or is an indirect exporter, that guarantee is bumped up to 90%. Now, it's very important to understand that these programs are available to the lenders. I always like to remind small businesses that you don't apply for an SBA loan. You go to the bank, you apply for a loan, the bank will make the decision if they're interested or not in providing the loan, and if they are, they have to make the determination that they are, if they're willing to assume all the risk, or they will need somebody to share the risk with, like basically as a cosigner. So if they need an additional guarantee, it means that the company is a good company. They like the business owner, but again, they don't feel comfortable assuming all the risk because some underlying weaknesses. They will come to SBA, and based on the use of funds, they will identify the program that best fits the small business needs. And if the company is an exporter or is getting ready to export or is an indirect exporter, they can qualify for the higher guarantee programs. And those higher guarantees make the loan much more attractive for the lender because they're sharing the risk with SBA. So the international trade loan is basically a term loan. It can be used to finance commercial real estate, refurbishing of commercial real estate, improvement, to purchase equipment. If there is debt that the bank wants to refinance, they can use the program for that purpose. Also, we have permanent working capital use, and also recently they can use the ITL to finance business acquisitions. So the underlying qualifier is that the loan will help companies expand internationally. They will grow their export sales. They will grow into new markets in which they're not present. They become, thanks to the financing, to the loan, they can become more competitive and domestically and internationally. So that will lead to a growth in sales, both domestic and export sales. And there is a program called the Community Advantage, in which SBA provides funding to the Community Advantage lenders that provide direct financing, and the ITL is one of the programs that can be used to provide loans up to $250,000. So this is for the benefit of the participants. These are entities that provide loans to companies that are not bankable yet. They're good companies, but they do not qualify for a commercial loan. So the Community Advantage loan is a great tool to help those companies grow and then finally become bankable in the future. Next one, please. I mentioned the Export Express. This is a loan that can go up to $500,000. We provide a 90% guarantee to the bank up to $350,000. And the guarantee between that amount and $500,000 becomes 75%. The loan can be issued as a term loan, long term, again, to finance commercial real estate, equipment, and all the needs that the company has, as indicated in the ITL, and also can be used to issue a line of credit that a small business will use to expand internationally. What does expand internationally mean? Well, basically, they can finance export sales. They can finance any marketing activity that will help them grow in current markets, export markets, and into new ones. For example, they need to refurbish the website. They need to participate in a trade mission, an international trade show. They need to send, for example, a sample product to their to potential buyers overseas. All of those use of funds are allowed under the Export Express. And when we issue the line as when we issue the Export Express as a line of credit, the small business can use 70% of the funds for export purposes, and they can still use 30% for the domestic working capital needs. So again, it's a great tool to use to help companies move their first steps into international markets. And also we want to remind that if the company is entering into a contract, and let's say that they get, for example, an advance payment from their buyer in a foreign country, they can, and their buyer will require a guarantee that if the small business does not perform, they will get their money back. Then the small business needs to issue a standby letter of credit. Since this is a promise to pay under certain conditions by the bank will require 100% cash collateral. So if they're using the Export Express or the EWCP, which is our next loan, if they're using those lines, the cash collateral is reduced to 25%. And this is a great program because we'll allow them to use the remaining amount for their working capital needs to supply the order, and the Export Express will be used to support the remaining 75%. Next one, please. Finally, as businesses grow, small businesses grow into international markets, their working capital needs will grow, and usually that growth will tie up their cash flow because they still have to sell domestically. So they need to decide, if they need, how they're going to use the money. Whom are they going to give the priority? To my domestic customers, which are here, which they can, be very vocal, or the ones that are in foreign markets, which are far away, out of sight, out of mind. But we don't want that. We want the companies to take advantage of all those opportunities. That's why the SBA provides to the banks a guarantee to provide working capital to the small business to finance export sales. And this is what the EWCP does, the Export Working Capital Program. Basically, it's a line of credit that goes up to $5 million and provides a 90% guarantee to the lender. The line is fully dedicated to finance export sales. And the way it does it, it can be, for example, to finance foreign purchase orders in which the small business exporter, once they get their PO from their foreign buyers, they can go to the bank and get an advance of up to 90% against that purchase order, or it can be used to, when it's issued as an asset-based line of credit, they can borrow against the foreign account receivables. They already made the sale, they get the payment in 30 days, but then now there is another order, they need money now, they can take that foreign account receivable to the bank and get up to 90%. And they can also borrow against their export inventory. They can borrow up to 75%. And they can also use the line to issue standby letters of credit. It's very important that, especially when they're involved in large contracts and they're getting large down payments, that they are able to guarantee those down payments. I also want you to remember that in the case of SBA, we don't require that the product might not be made in the U.S. because we know how the supply chains work nowadays. There is a lot of integration of firms around the world, but what we require is that the U.S. small business, when they export, they ship from the U.S., either port, airport. So that is a key qualifier. We know that there are a lot of companies that are distributors and they source products worldwide. So we want also them to take advantage of these programs for the purpose of financing their export sales. So this is next one. So this is my presentation. Now, we wanted to bring you some of the lenders that have experience using our programs to finance their small business exporter clients. And it's important that the small business borrower and the small business lender are informed about our programs so they can use them to take the maximum advantage and help our companies grow internationally. Thank you.
Thank you to my good friend, Sandro. Good morning, all. Glad to be here. We work hand in hand with the SBA to find the best financing fit for exporters of all types. Won't spend a lot of time on myself, but greetings. My name is Chris Clark, Vice President and Senior Relationship Manager at TD Bank. My office is located in Jacksonville, but I cover export loans for any businesses north of Fort Lauderdale and south of Georgia. TD is one of the largest banks in the world, and we have a presence in the U.S. from Maine to Florida with our global headquarters in Toronto. In the state of Florida, we have over 2,500 employees, and we continue to grow. Next slide, please. As you can see, we offer a wide range of solutions in conjunction with the SBA, but from the titles, you can probably guess which one helps out exporters like yourself, and that would be the Export Working Capital Program. Thanks for highlighting it, Sandro. I'd say 75% of our export clients have this facility in place. As Sandro mentioned, we do also offer the SBA Export Express, which we can lend up to $500,000. The good thing about the SBA Export Express, and maybe Sandro didn't want to go dive into the details, but the proceeds can be very broad, which is helpful to you. The SBA and banks will agree to this facility for anything that enhances your export business. So you can get fairly creative, which is cool. But if you have a larger, growing business, you probably want to consider the Export Working Capital Program, as the facility can be offered from $500,000 all the way up to $5 million. The proceeds of these facilities are a little bit more specific, but you can use for general working capital, a specific transaction, like maybe a huge order came up that you need to fill, or as Sandro also mentioned, if you have a standby letter of credit need, it can be carved out from the facility as well. So think of the export facility really like the hammer in your toolbox for export capital. And it will make banks want to lend you. As you can see, that 90 guarantee really makes it attractive. But I don't know if everyone understands what the 90% means. And not to draw you into the internal weeds, but if our loan was to ever go bad, that means Sandro has to pay 90% of it out of his own pocket. All right, maybe not his own pocket, but essentially the SBA would have to pay 90% and the bank would be on the hook for 10%. So 90% Sandro, 10% me. I want to make that loan. That's a good deal from a banker's perspective. That's not to say we will just lend you because you have an export business, but I would say it's much, much easier for us to lend to you through this program than if you wanted any other traditional non-SBA loan. And really, as you can see, compared to the other SBA loans, the bank want exports because of all types of reasons, but that 90% guarantee doesn't hurt. The export working capital program can look a couple different ways, but the most traditional is probably simply the revolving line of credit. For example, I've got a lumber exporter who ships a product all over the world. They purchase the raw material domestically with our line of credit, then put it on a ship that sails far away from us, then expects their customer to pay them for those goods, and we advance a percentage of their bill of sale. We as a bank typically would never lend an inventory that we can't physically touch, like on a boat, on the water, outside the US, or products that were shipped to your cousin in Trinidad who's going to pay you in 120 days. That's simply too much risk for any bank, but totally permissible under the export revolving line of credit. So that is an actual example, including the cousin in Trinidad. Next slide, please. Of course, though, there are options outside of all the great SBA programs for exporters. And TD is a full service solution for all of your needs. And since you're in the export business, there's probably a good chance you have a foreign currency need, even if you think you don't. A lot of folks, and maybe many of you this morning, are probably simply zoning out because they hear FX and think that their supplier can only invoice their products in USD. But you don't know if you don't ask. So I tell all of our borrowers, ask your partner to bill you in at least two currencies, at the very least, the local currency and USD, maybe euro, maybe yen, maybe pound. And then once you get those two invoices or three, let the bank help you do the math. And we'll include whatever transaction fees that we're going to have. And we'll show you what is more profitable. And you would be shocked a lot of times. It will lower your purchase cost by simply paying in the local currency. And we offer over 50 different currencies worldwide. So I'm sure we'll be able to accommodate your supplier. The best part is you can transact online without even having to deal with me. This is simply a function on your online banking. But please, the next time you do receive a foreign order, request that they bill you in two currencies and at least see if there's any margin you can take advantage of, and use your banking partners to help guide you in those decisions. That's all I got for now. I thank you for your time, team.
Hello, everyone. My name is Patrick Ellis, and I'm joining this conversation from Seacoast Bank. I'm based in Orlando, Florida. Seacoast, just to make you all aware, we are a Florida-based bank out of Stuart, Florida. We're approximately about $8.5 billion in assets with about 50 locations spread out throughout the Central and South Florida markets. I'd like to advance to the next slide and kind of highlight one of the deals that we have done here at Seacoast. We had a customer that was our present customer of Seacoast Bank approach us to work with him about an Export Express working capital loan. He came to us for a $250,000 request. He has some of the strengths that had really impressed us, not only being an existing customer of Seacoast at the time, but he had formed his company back in 2017. He was actually a procurer of supplies and shipping them from the US over to the British government in the Caribbean. He was actually kind of like an Amazon. He would procure any kind of supplies that the government may need. He had grew up there as a kid, had I guess, relationships, you might say, with the government employees, and was able to kind of be their procurement specialist for any supplies that they need. Some of those supplies may have included technology, office furniture, even all the way to company vehicles, pipes and draining systems, et cetera. So any and everything that they needed to operate for different projects within that British government, he was able to provide their supplies for. The business was owned and operated by a U.S. citizen here based in the Florida market. And, you know, one of the reasons that he was seeking that export working capital was a way for him to kind of be able to go and purchase or procure these types of supplies and inventory at a much cheaper cost so that he could improve his margin and his bottom line. It was a great win for both Seacoast and for the customer. Just to kind of share some strengths, I'll just say again that, you know, he was a customer that had been in operation since 2017. So he had a unique track record up to this point when the request was made to us. He also had some great outside income as he had a secondary job that he offered to the transaction. He also had strong support from his personal cash sources as he had propped up the business since its infancy in 2017. We were able to secure a full all business assets collateral filing for the request. And with the 90% guarantee, as mentioned before, it was just a win-win for both the bank and for the customer. But with that, I would just say in general, you know, we typically have a little bit different approach. We do offer this particular product solution within the SBA. As mentioned, we are a full SBA complement shop with different product sets, similar to what you just heard from TD. We do offer expanding products from the CAP line, 7A, 504, to this Express Working Capital line. You know, look to you know, work with anyone that's based in the area. And you know, with that, Sandra, I'll kind of turn it over to the next person for their presentation.
Good morning. I hope everyone can hear me all right. My name is Chuck Youngerman. I'm with Regions Bank in global trade. I'm a little different than I specifically work in global trade. That's all I do. Regions is based in Birmingham. However, our global trade office is in Miami. I'm not going to rehash things that've been going over. I really want to hit one important point. I think Sandro talked about it. Everybody's talked about it, but one point that makes the SBA program a little bit different. SBA and the XM Bank program look very similar, but the one advantage SBA has over the other, and it's the only place to get this, is purchase order financing or purchase order funding. So it's really the only game in town. If you get a large PO that you need to go out and buy materials for to get the process started, SBA has a program that allows you to borrow against that PO. You go out, you buy the raw materials, you make what you make, and then you ship it. It's, again, not something XM offers, very difficult to do on a foreign PO with any other bank unless you go to some private lender. That would be very expensive. So it's a great tool to use that the SBA has, and it's not available anywhere else. We generally do the same things. You heard what TD does. We do many of the same things. Letters of credit, documentary collections. We do standbys, which are becoming more and more important. You know, if you take a large down payment to start the sales process, a lot of those companies now will require you to put up a standby equal to the down payment. The SBA program has a product that allows you only to cash secure it by 25%, not the full 100%. So that makes a huge difference cash flow wise. The biggest thing I could say is if you have questions, every one of these deals are different. Everybody's a little bit different. Every country, you might be going to different countries than somebody else. That makes a difference. Reach out to any of us, myself or TD or the other banks, or whoever you bank with, and ask those questions, because everybody's going to be slightly different. And again, the story may change a bit depending on what country you're exporting to. So feel free to reach out and contact me if you have any questions. Thanks.
All right. I'm getting feedback. Everybody please mute yourselves. All right. So now.
Joanne, we can hear you.
Can you hear me now?
Yes, now, yes.
right.
If I can add a few words, referring to in reference to the presentation by the colleagues for the bankers, they mentioned different examples, and it can go from what Patrick described as a small business, somebody operating from home. And that happens a lot, where you have people that start this project as a side business, and then they grow sometimes to very large numbers in terms of sales. And I remember I had a client in Atlanta. He started from his basement. He built on his experience working for a large multinational, and then he was able to create his own business. And to this day, he still operates from his basement. And he has become a broker also in the wood industry. But also you have companies that have been able to, larger companies that, thanks to these programs, are able to finance those sales and continue their growth into international markets. So it's always, I also want to remind you that, if you don't mind, I want to mention some partners that are available in the community. You have the small business development centers, especially here in Florida. They have a lot of international trade specialists that can work with you. You have Enterprise Florida, also the state agency that has grants for companies to explore opportunities into international market. You have the Department of Commerce that have their colleagues around the world based in the embassies and consulate. They're also a great tool to help you explore opportunities into international markets. So I want to invite you, as the colleagues from TD, Seacoast and Regions mentioned, talk to your lender, see what opportunities there are, and if you need export financing, the programs are there to help you. And again, I also want to mention again the Export-Import Bank with their insurance for foreign account receivables, which will help mitigate the risk of selling on credit to foreign buyers. Thank you.
Thank you, Sandro. And thank you to Chris Clark from TD Bank, Patrick Ellis from Seacoast Bank, Chuck Youngerman from Regions Bank for being presenters today. We are going to open up the question and answer panel. I have asked that all questions be dropped into the chat session. Christina, do we have any questions? No, not yet. Does anybody have any questions? Please drop a question in the chat while we have about 15 minutes remaining for Q&A. And while we're waiting on that, the presentation again is in the chat for session 2. Christina has just dropped the PDF of the presentation from session 1, and if you were unable to make it, you can download that presentation as well. All the contact information for all the presenters on the session 1 panel are there on the very last slide. Any questions? Do any of our presenters have any last words?
I don't know if, again, they want to reiterate some of the feature some of their clients. And I know that Chuck and Patrick and Chris, they have other clients that are active exporters. And again, they might be using our programs or not. And that's the idea. Hopefully, SBA will help those companies that move the first steps, they grow, and then eventually the bank will feel comfortable providing the financing directly.
All right, no questions, Christine? No. All right, well, that concludes our session. We will wrap it up just saying thanks again to our presenters. Thank you to the Greater Palm Bay Chamber of Commerce for being a host presenter and getting the word out about this webinar as well. Again, please take a moment to download session 1 and session 2 presentations from the SharePoint link provided in the chat session. If there are no questions, then we're just going to say thank you, and we hope to meet again soon on exporting or other types of business development workshops. So thank you, and everyone have a great day.
Thank you.